Risk management and profit management are the same mistake wearing opposite costumes. One dressed as fear, the other as greed. You're terrified of losing, so you risk too little or bail too early. You're desperate to win, so you hold too long or size up at exactly the wrong time. And here's what nobody tells you. You think these are two different problems requiring two different solutions, but they're not. They're the same psychological wound expressing itself in opposite directions. Fix one without fixing the other, and you've fixed nothing. Today, I'm showing you why 90% of traders are failing at both simultaneously, and why the solution isn't more rules, it's understanding the belief that's creating both failures. I need you to really understand what I just said, because most traders will hear those words and think I'm being poetic or metaphorical. But I'm being completely literal. The reason you can't hold winners, and the reason you can't cut losers, those aren't separate problems. They're the same problem. And until you see them as one unified dysfunction, you'll keep trying to fix them separately and getting nowhere. You'll work on your discipline with winners and think you're making progress. Then you'll work on your discipline with losers and think you're addressing a different issue. But you're not. You're just rotating which symptom you're paying attention to while the root cause continues destroying you from both directions. You're losing in one of two ways right now. Maybe both. You're either protecting yourself so carefully that you never make meaningful profit, or you're chasing profit so aggressively that you keep blowing up, and you oscillate between the two. You tighten your risk management, and suddenly your profits shrink to nothing. You feel like you're working so hard, taking all these trades, following all your rules, but you're barely making money. So you loosen up. You decide you need to let winners run more. You need to be aggressive, and then your losses explode. One or two bad trades wipe out weeks or months of careful gains. So you tighten up again, and the cycle continues. You're bouncing back and forth between being too scared and being too greedy, thinking you need to find the perfect balance, the golden middle. But there is no middle. There's only a completely different way of thinking about this entire problem that makes the question irrelevant. You know the rules. I know you know them. You've memorized them. You've written them down. You've committed to them. Risk 1% per trade. Let your winners run. Cut your losers short. Manage your position size carefully. Use stop losses. Have a plan before you enter. Stick to your target. Don't let emotions dictate your decisions. You know all of this. But when you're in a trade, when actual money is moving on your screen, when you're watching those numbers change in real time, the rules disappear. They just vanish. Your fear makes you take profits at the first sign of reversal, even though your plan said hold until target. Your hope makes you give losers just a bit more room, even though your stop was clearly hit. You're not consciously breaking your rules. You're not deciding to be undisciplined. You're being hijacked by emotions you don't even realize are running the show. And here's what you need to understand. Risk management and profit management aren't technical skills. They're not about knowing the right percentages or having the right formulas or following the right rules. They're about emotional sovereignty. The difference between traders who fail and traders who succeed isn't that the successful ones have better rules. Most traders have roughly the same rules. Risk somewhere between 0.5% and 2%. Use stop losses. Have targets. Pretty much everyone knows this. The difference is that successful traders have achieved something most traders never achieve: emotional neutrality. They don't feel relief when taking profit. They don't feel pain when taking losses. They don't feel pride holding winners. They don't feel shame cutting losers. They feel nothing, just execution. And that nothingness isn't numbness. It's not detachment. It's not caring. It's freedom. Freedom from the emotional tyranny that makes you manage your feelings instead of managing your positions. You've been trying to become disciplined enough to follow your rules despite your emotions. That's the approach everyone takes. Build more willpower. Be stronger. Be more committed. Force yourself to do what you know you should do, even when you don't want to. But that's an endless war that you will never win. Emotions are stronger than willpower. Always. Every single time. You can win a few battles. You can have periods where your discipline holds. But eventually, always, the emotions break through. And when they do, when you've had a string of losses and the fear is overwhelming, or when you've had a big winner and the greed wants more, your willpower crumbles. Your rules become suggestions. Your discipline becomes flexible. And you sabotage yourself again. The real solution isn't fighting your emotions, it's changing the beliefs that create them. Because your emotions aren't random. They're not just happening to you. They're being generated by beliefs you hold about what trading means. The belief that profit makes you valuable. The belief that loss makes you incompetent. The belief that being wrong means something about who you are as a person. Change those beliefs and the emotions disappear. And when the emotions disappear, following your risk and profit management rules becomes effortless. Not because you've built superhuman discipline, because there's nothing to be disciplined about. You're just executing a process. No different than following a recipe or driving to work, just steps, one after another. By the time we're done here, you're going to understand the 3-layer framework that's actually preventing proper risk and profit management. Layer 1, false beliefs about what trading means to you. Layer 2, emotional reactions those beliefs create. And Layer 3, behavioral sabotage those reactions produce. You'll learn why trying to manage risk and profits separately ensures you fail at both. And you'll get the psychological intervention that makes mechanical execution possible. Not through discipline, through belief transformation. Let me tell you about 2 traders I watched destroy themselves in opposite ways. First trader, we'll call her Lisa. Lisa had perfect risk management, absolutely textbook. She never, ever let a loss run. The moment her stop was hit, she was out. No hesitation, no hoping it would come back, no moving the stop to give it more room. Beautiful discipline with losses. I mean, really beautiful. She understood that cutting losses is sacred, that you cannot let small losses become big losses, and she followed that rule without exception. But she couldn't hold a winner to save her life. The moment a trade went green, the moment she had any profit at all, she'd feel this overwhelming urge to take it, to lock it in, to make it real, to get that money into her account where the market couldn't take it back. Her brain would start running scenarios. What if it reverses? What if I watch this profit disappear? What if I had it and lost it and then I'll feel like an idiot? So she'd exit. Sometimes at her target, which would have been fine, but often way before. She'd take 50% of her target because she saw a small pullback and got scared. She'd exit with a $100 profit when her plan said wait for 500 because she couldn't handle the anxiety of watching it move. Her win rate was high, around 70%. Most of her trades won, but her average winner was tiny compared to her average loser. She was making $100, maybe $200 on winners. But when she lost, she was losing $300, $400 because she was following her stop correctly. So mathematically, she was barely breaking even, working every day, taking trade after trade, following her rules about losses, but bleeding out slowly because she couldn't let profit run. She was dying by 1,000 paper cuts in reverse, winning constantly but never making meaningful money. And she couldn't figure out why. She knew the rule, let winners run. She'd read it in every book, but she couldn't do it, because every time she tried, the anxiety became unbearable. Second trader, call him James. James had the opposite problem. He could hold winners like an absolute champion, had the emotional capacity to let trades run, to watch profit grow and not touch it. Some of his trades would go up 50%, 100%, 200%, and he'd just sit there, watching, letting it happen, not taking profit out of fear, not exiting because of a small pullback, just holding based on his plan. And when the trade finally hit his target, he'd exit with these massive gains. Beautiful. Everything you're supposed to do with winners, he did naturally. But he couldn't take a loss. Just could not do it. His stops were suggestions, gentle recommendations that he'd consider but not follow. Price would hit his stop loss, and instead of exiting, he'd think, let me just give it a bit more room. It's probably just noise. It's probably going to reverse. My analysis was good. I just need to be patient. So he'd move the stop further away, and the trade would keep going against him, and he'd move it again. And sometimes, maybe 30% of the time, the trade would eventually reverse and come back and he'd be right. And those times reinforced the behavior. See, he'd think, I was right to hold. I was right to give it room. I would have been stopped out for nothing. But 70% of the time, it didn't come back. It kept going. And what should have been a $200 loss became a $1,000 loss, became $2,000, became $5,000. And these catastrophic losses would wipe out months of those beautiful winners he'd worked so hard to capture. He lasted 3 years trading this way before he finally blew up completely. And what killed him wasn't a market crash or bad luck. What killed him was one trade where he couldn't accept being wrong. One trade where he held and held and held, and the loss became so big it destroyed his entire account. Both of these traders failed. Lisa ended up frustrated, working incredibly hard, trading all the time, but barely profitable after years. James ended up completely blown up. Account gone, confidence shattered. And here's what neither of them understood. They had the same problem. Exactly the same problem. Both were managing their emotions instead of managing their positions. Lisa was taking profit early to feel relief, to escape the anxiety of having an open position with profit that could disappear. James was holding losers to avoid feeling wrong, to escape the shame of admitting his analysis was incorrect. Different emotions, same fundamental mistake. Both were letting feelings dictate their exits instead of their plans. Are you managing positions or medicating emotions? Because that question is the key to everything. Every exit you make is either based on your plan or based on what you're feeling. And if it's based on what you're feeling, it doesn't matter how well dressed it is in technical analysis or risk management language. It's still emotional. It's still sabotage. Let me give you a different way to think about this. Imagine you're walking a tightrope between two buildings, high up, a long way to fall. On your left side, there's a safety net spread out below. It's labeled safety. On your right side, there's another net labeled profit. And you're trying to walk this tightrope, trying to get from one building to the other, and you're wobbling. Every time you lean left toward safety, you drift away from profit. Every time you lean right toward profit, you lose safety. And you think the solution is finding perfect balance, staying exactly in the middle, not leaning either way, perfectly balanced. But that's impossible. You cannot walk a tightrope without moving, without adjusting, without constant, tiny leans in both directions to maintain momentum. The act of walking requires imbalance, requires controlled falling and catching yourself with each step. If you try to stay perfectly balanced, perfectly still, you'll freeze. You won't move forward. You'll just stand there terrified, unable to progress. The traders who make it, the ones who actually walk from one building to the other successfully, they're not the ones who've achieved perfect balance. They're the ones who've stopped seeing the nets, who've stopped looking down, who've stopped thinking about falling or reaching or safety or profit. They're just walking. And when you're just walking, when you're not trying to balance or manage or achieve anything, when you're just putting one foot in front of the other based on the process of walking, you naturally move forward. The safety and the profit take care of themselves, not because you're balancing them, but because you're not thinking about them at all. You're just executing the process of walking. What if the solution to risk and profit management isn't better balance, but less awareness of what you're trying to balance? What if the answer is to stop thinking about risk and profit as things to manage and start thinking about them as automatic byproducts of following a process? There are 3 layers to why you're failing at this. 3 layers that stack on top of each other, creating the dysfunction. And until you address all 3, you're just rearranging deck chairs on a sinking ship. Layer 1. The false beliefs that create the problem. Belief number 1. Profit validates me. Loss invalidates me. This is the root of everything. This is the core wound that all the other problems grow from. You believe, maybe not consciously, but definitely subconsciously, that when you make money trading, it means you're smart. You're capable. You're worthy. You've proven something about yourself. And when you lose money, it means the opposite. You're stupid, incompetent, Not good enough. You failed. And when you hold that belief, every single trade becomes existential. Every exit carries the weight of your entire identity. Taking profit feels like saving yourself from potential invalidation. If I take this profit now, I lock in the win. I lock in the evidence that I'm capable. But if I hold and it reverses, I lose that evidence. So you exit early, not because your plan says to, because you're protecting your sense of self. And holding through a drawdown, watching a winner give back profit, it feels like volunteering for invalidation, like choosing to let go of proof that you're good enough, so you can't do it. Your nervous system won't let you. It's not a discipline problem. It's a survival instinct protecting your identity. And on the flip side, cutting a loss feels like admitting you're incompetent, like publishing proof that you were wrong, that you don't know what you're doing. So you hold, you give it room, you move your stop. Because as long as the trade is still open, you haven't been proven wrong yet. There's still hope, still a chance your analysis will be validated. And hope is less painful than the definitive shame of accepting a loss. You cannot manage positions properly when your identity is on the line. You just can't. The emotions are too strong. The stakes feel too high. Every trade becomes about who you are instead of what the market is doing. And that shift, that making trading about yourself instead of about probability and process, that's what destroys you. Belief number 2. I can predict what happens next. You believe that your analysis can tell you what the market will do. That if you study enough, analyze enough, prepare enough, you'll know. And that belief creates impossible expectations. Because when you expect to be right and you're wrong, the emotional impact is devastating. It's not just, oh, that trade didn't work. It's, I was supposed to know. I should have seen that coming. I failed at the thing I'm supposed to be able to do. And that shame makes holding winners through pullbacks unbearable. Because you expected it to go straight up and now it's pulling back and maybe you were wrong. And it makes cutting losers impossible because you were so sure, and admitting you were wrong feels like admitting your entire approach is flawed. But when you accept that you cannot know what happens next, when you truly accept it, not just intellectually but emotionally, when you trade from probability instead of prediction, being wrong has no emotional charge. It's just variance. It's just the market being the market. This one didn't work. Next. That belief shift from prediction to probability transforms loss from failure into data. And that transformation makes everything else possible. Belief number 3. The market owes me. You did the work. You analyzed correctly. You waited for the right setup. You followed your plan. So the trade should work. And when it doesn't, you feel cheated, like you did everything right and got screwed. That feeling of being owed makes you hold losers, because you're waiting for what you're owed, for the market to give you what you earned. And it makes you grab profits quickly. You take what you can before the market takes it back, before you lose what you're owed. But the market owes you nothing. Absolutely nothing. Zero. It doesn't care about your analysis or your hard work or your plan. It just moves based on supply and demand, based on millions of decisions by millions of participants. When you accept that the market owes you nothing, when you stop expecting it to reward your effort or validate your analysis, exits become mechanical. The market does what it does. Price hits your stop, you exit. Price hits your target, you exit. Price shows your profit-taking signal, you exit. No negotiation, no feeling cheated, no holding out for what you deserve, just execution based on predetermined rules. But even if you change these 3 beliefs intellectually, even if you can say out loud that profit doesn't validate you and loss doesn't invalidate you, your emotions don't disappear immediately. There's a second layer. The emotional reactions that sabotage you even after you understand the beliefs are false. Reaction number 1, relief seeking in profit. You're in a winning trade, it's up, it's green, and you feel anxiety. Why? Because the profit is yours right now, but it could disappear. It's unrealized. It's not real yet. It's just numbers on a screen that could evaporate at any moment. And that uncertainty, that lack of control over whether the profit stays, creates intense anxiety. So you want to exit, to lock it in, to transform unrealized into realized so you can stop worrying, so you can have the relief of knowing the profit is safe. This is relief seeking. And relief seeking always, always costs you maximum profit. Because the best runners, the trades that make you the most money, are the ones that make you the most anxious. The ones that go parabolic. The ones where you feel most exposed. The ones where you have the most to lose. Relief seeking exits those exact trades. It exits at the first sign of slowing momentum because you can't handle the anxiety anymore, and then you watch the trade continue without you and make 5 times what you captured. Reaction number 2. Shame avoidance in losses. Your stop is hit. Price touched your stop level. Your plan says exit, but you don't exit. Why? Because exiting means admitting you were wrong. And that admission triggers shame. The feeling that you're not good enough, that you failed, that you're incompetent. So you hold, you give it room, you move your stop, you hope, not because your analysis changed, not because you have new information, because you're avoiding the emotional experience of being wrong. You're trying to escape shame. And shame avoidance turns manageable losses into catastrophic ones. Every blown-up account, every trader who's destroyed themselves, they all have dozens of shame avoidance holds in their history. Dozens of times where they knew they should exit but couldn't because the shame was too painful. And those holds, those extensions of losing positions beyond the planned stop, that's what creates the losses that end careers. Reaction number 3. Pride preservation in both. You want to exit this trade so your equity curve looks good, so your win rate stays high, so you can tell someone about your success, so you feel like you're doing well. That's pride. You're managing the position to preserve your image of yourself as a successful trader. Or you want to hold this trade so you can say you caught the big move, so you can feel like a real trader who isn't scared, so you can prove you have what it takes. That's also pride. Pride makes you optimize for looking good instead of being profitable. And those two goals are often opposite. Looking good means high win rate, which usually means taking profits too early. Looking good means never having big losses, which usually means moving stops. Looking good means appearing fearless, which usually means holding losers, hoping they'll come back. And all of that looking good destroys actual profitability. These emotional reactions, even after you understand the beliefs are false, they still create specific behavioral patterns. Patterns that appear disciplined on the surface, but are actually sabotage. Pattern number 1, the moving target. You start taking profits. First, trade runs 20% before you exit. You feel good. But you also notice that after you exited, it ran to 30%. So next trade, you try to hold longer. This one runs 15% and you take profit. But it runs to 25% after you exit. So next trade, you take profit even earlier, at 10%. Because the anxiety of watching potential profit is building, you're progressively exiting winners earlier and earlier the more experience you get. And if someone asks you, you'll say you're learning to take profit. You're being smart. But what you're actually doing is training yourself to sabotage runners. Because the emotional anxiety builds with each winner, and you're teaching your brain to escape it sooner. Pattern number 2, the widening stop. You start trading with tight stops. They get hit frequently. You feel stupid every time, like you're being stopped out by noise. So next trade, you use a wider stop, still gets hit. You feel even more stupid. You gave it room and it still failed. So wider stop. And eventually your stops are so wide they're meaningless. You've eliminated risk management entirely in your attempt to avoid the feeling of being stopped out. But all you've done is trade many small losses for a few catastrophic ones. Pattern number 3, retrospective rationalization. You exit a trade and immediately your brain creates a story about why it was the right decision. The story isn't based on your plan. It's based on justifying your emotional action. I saw weakness in the price action. you tell yourself. But what you actually saw was your own anxiety. I wanted to lock in profit, you say. But what you actually wanted was relief from uncertainty. I thought it was going to reverse, you claim. But what you actually thought was, I can't handle the fear anymore. These rationalizations prevent you from seeing the pattern, from recognizing that you're managing emotions, not positions. Because if you justify every emotional exit as a smart decision, you never have to face that you're not following your plan. You never have to admit that fear and hope and pride are running your trading. You just keep believing you're being strategic when you're actually being controlled. So how do you break these three layers? How do you go from being emotionally hijacked to emotionally sovereign? Layer 1 work. Belief replacement. I need you to write these 3 statements every single day. Not as affirmations, not as positive thinking, as true statements you're reminding yourself of. Profit doesn't make me valuable. Loss doesn't make me incompetent. The market doesn't owe me anything. Write them in the morning before you trade. Write them at night before you sleep. Write them after every trade if you need to. And each time you write them, notice the resistance. Notice the part of your brain that wants to argue, that wants to say, but profit does prove I'm good at this. That resistance is the old belief. It's still there. Keep writing until the resistance fades. Until you can write those statements and feel nothing, just truth. This isn't about convincing yourself of something false. It's about recognizing something true that you've been denying. Layer 2 work. Emotional labeling. Before every exit, pause. Just stop. Don't click anything. Close your eyes if you need to, and label the emotion you're feeling. I feel anxious. I feel ashamed. I feel proud. I feel fearful. I feel greedy. Don't judge it. Don't try to change it. Don't tell yourself you shouldn't feel it. Just label it. Name it. Then ask yourself one question. Is this emotion what's making me want to exit right now? If the answer is yes, don't exit. Wait. Wait until the emotion passes or at least fades. Wait until you can assess whether your plan says exit. And exit from your plan, not from feeling. This creates a gap between emotion and action. And in that gap, choice exists. Freedom exists. Layer 3 work. The exit journal. After every single exit, write this sentence. I exited because, and complete it. But here's the rule. You can only write one of 3 things. I exited because my target was hit. I exited because my stop was hit. I exited because I felt this specific emotion. That's it. Nothing else is allowed. You can't write, I exited because I saw weakness. That's rationalization, unless weakness was literally in your plan as an exit signal. You can't write, I exited because I wanted to lock in profit. That's relief-seeking dressed up as strategy. Just those 3 options: target, stop, or emotion. This forces brutal honesty about whether you're following your plan or following your feelings. The integration practice. Trade the smallest size where you still feel something, where wins and losses still register emotionally but barely. Maybe it's $100 per trade. Maybe it's 50. Maybe it's 10. Doesn't matter. Find the size where you care just a tiny bit. And at that size, watch what you feel when in profit. Do you feel anxiety, pride, relief? Watch what you feel when in loss. Shame, fear, hope? Don't try to change the feelings. Don't judge them. Just observe them. Notice that they're not facts. They're reactions. Notice that they pass. Notice that you can feel them and still execute your plan. This is how you build emotional sovereignty. Not by eliminating emotions, but by proving to yourself that you can feel them and not be controlled by them. The red flag test. If you're about to exit a trade and you feel strong emotion, any strong emotion, that's a red flag. Relief, fear, hope, pride, anxiety, any of it. Strong emotion means this exit is probably not from your plan. It's from your feelings. So here's the rule. Wait 5 minutes. Set a timer. 5 minutes. During those 5 minutes, don't look at the trade. Go do something else. Walk around. Get water. Breathe. After 5 minutes, come back. If your plan says exit, exit. If your plan says hold, hold. Regardless of what you feel, those 5 minutes teach your brain something critical, that emotions don't control actions, that feelings can be present without dictating behavior, that you are not your emotions. You're the person who experiences emotions but chooses actions based on something else. You came here thinking you needed better risk and profit management rules, more discipline, more willpower, a better system. And what I've shown you is that rules and discipline and systems are completely useless against the emotional tsunami of real trading with real money. You don't need better rules. You need to change what trading means to you. Because right now, every exit is contaminated by beliefs that make profit feel like validation and loss feel like failure. And when exits carry that weight, when they mean something about who you are, you cannot execute them properly. You're too busy protecting yourself from emotional pain to follow a mechanical process. Layer 1, false beliefs. Profit validates me. Loss invalidates me. I can predict outcomes. The market owes me. These beliefs create emotional pressure that makes proper management impossible. Layer 2, emotional reactions. Relief seeking in profit. Shame avoidance in losses. Pride preservation in both. These reactions hijack your exits and make you manage feelings instead of positions. Layer 3, behavioral sabotage. Moving targets, widening stops, retrospective rationalization. These patterns look like learning, but they're actually degradation of your process. 90% of traders fail at risk and profit management, not because they don't know what to do. Everyone knows what to do. Cut losers short, let winners run. But because they're trying to do it while emotionally invested in outcomes. They're trying to let winners run while feeling anxious about giving back profit. Trying to cut losers short while feeling ashamed about being wrong. And you can't do both. You cannot be emotionally invested and mechanically execute at the same time. One has to give. And since emotions won't give willingly, since you can't just decide to not feel things, beliefs must change. The beliefs that create the emotions must be transformed. Change what profit and loss mean to you. Not intellectually, experientially. Trade small enough that wins and losses don't trigger strong emotions. Stay there. Maybe for months. Maybe for a year. Maybe longer. Until profit feels neutral. Until loss feels neutral. Until being right or wrong means nothing about you. This is slow. It's unglamorous. Your ego will hate it. But it's the only way. Because emotional sovereignty, the ability to feel without reacting, is the foundation of both risk and profit management. Without it, you're just fighting yourself. And that's a fight you will never, ever win. You have permission right now to trade smaller than seems worth it just to build emotional neutrality. You have permission to make less money for longer while you fix your relationship with profit and loss. You have permission to prioritize psychological development over account growth, because psychological development is what creates sustainable account growth. And the traders who skip this step, who try to scale before they're emotionally ready, they always end up back at zero eventually. Always. Here's what I want you to remember. I don't trade to feel good about myself. I don't exit trades to manage emotions. I execute my plan regardless of what I feel. Profit doesn't validate me. Loss doesn't invalidate me. I am the executor of a process that works over time. Each trade is just data, just one sample in a distribution that becomes profitable over hundreds or thousands of samples. And I am psychologically free. Free from needing profit to feel valuable, free from fearing loss as invalidation, free to execute mechanically because nothing is at stake except money. And money is just a tool for keeping score in a game I understand is probabilistic. This work is uncomfortable. Really uncomfortable. Changing beliefs means facing the fact that you've been trading for the wrong reasons, that you've been using trading to prove something about yourself, that every winner made you feel a little bit worthy and every loser made you feel a little bit insufficient. And admitting that Facing that, it's harder than learning any technical skill. Managing emotions means feeling them fully instead of avoiding them, instead of exiting to escape them. Behavioral transformation means seeing patterns you're not proud of, seeing how many times you've betrayed your plan, how many times you've let fear or greed override your process. Most traders will watch this video and nod along and change nothing, because change requires admitting that you're the problem, not the market, not your strategy, not bad luck. You, your beliefs, your emotions, your ego, your need to feel smart or right or successful. And that admission is harder than any trading skill. It's easier to keep blaming external factors, to keep searching for the perfect strategy or the perfect rules or the perfect mentor, because as long as the problem is out there, you don't have to do the uncomfortable work of looking in here. If this video showed you something you hadn't seen before, if you recognized yourself in Lisa or James or in any of these patterns, if you're willing to do the uncomfortable work of belief transformation, hit that like button right now. Not for me, not for the algorithm, as a commitment to yourself, as acknowledgement that you're choosing psychological development over staying comfortable in dysfunction. Drop a comment and tell me which layer you struggle with most. Is it the beliefs about what profit and loss mean to you? Is it the emotional reactions that hijack your exits? Is it the behavioral patterns you've developed over time without even realizing it? Because naming which layer is your weak point helps you focus your work. It helps you know where to put your attention. And I want to see traders become conscious of what's actually driving their failures, instead of staying unconscious and repeating them forever. And subscribe for more content on the psychological architecture of trading success, the unsexy, uncomfortable, transformational work that actually separates winners from losers. Because most trading content is about strategies and setups and technical analysis, and that's fine. That has its place. But this is about something more fundamental. This is about becoming the kind of person who can execute any decent strategy without self-destruction. And that's the only thing that actually matters. Because you can have the best strategy in the world, and if you can't execute it because your emotions override your logic every single time, the strategy is worthless. You're not bad at risk and profit management. You're trying to execute mechanical processes while emotionally invested in outcomes. And that's impossible. It will always be impossible. Fix the investment. Fix the beliefs creating it. Change what winning and losing mean to you. And the management becomes effortless. Not through discipline, not through willpower, through freedom. Through not needing the trades to prove anything about you. Through being psychologically free.